So sure enough, America is putting a 50% tariff on copper imports, but not refined copper. And that pushed down the price of copper futures radically today in US trading. Let's get more from Ben Ayre, who is lead dry bulk data analyst at Kpler. Thanks very much indeed for joining us. So really appreciate it. So refined copper not included, and that shocked the market, it seems.
Indeed, Andrew. Thanks for having me, and good afternoon. At Kpler, we track the seaborne trade of lots of commodities, copper cathodes and anodes included. So all of the refined copper that's been going into the US since the Section 232 investigation was first announced in February of this year has been tracked on our platform, and we've seen this real hike through the early months of the year. So late February, we had the announcement of an investigation into a potential tariff. The rate of 25% was mooted, and that led to a premium on COMEX, which resulted in traders flocking to land refined copper in the United States. A typical year sees 800, 900,000 tons of copper being landed in the US. And as of today, we've already seen that this year. So we're looking at essentially double the volume that you'd normally expect. We've seen about 500,000 tons of volume coming in from Chile, but we've also seen some more atypical suppliers coming to the market. So you've seen volumes coming in from Australia, from China, from warehouses there. You've seen copper coming in from South Korea, Germany, and Spain. In fact, we've been tracking in the last few days the impact of the 50% tariff announcement that came on July the 8th. So in short, there are only very few ways in which you could decide to ship copper into the US since that 50% announcement was listed. And so we've seen market players get quite creative. We have a vessel, the Kiating, that actually carried copper from Australia to Hawaii. It discharged copper in Hawaii, which is a complete peculiarity. About 15,000 tons. That was safely discharged just yesterday, prior to the tsunami, thankfully. Today, we've seen two more cargoes that departed their origin subsequent to the 8th. So we see the BBC Norway, which is a 20,000 or thereabouts ton vessel, came up from Angamos in Chile and discharged in New Orleans. And we've also seen a vessel come in from Hamburg in Germany. But those are vessels that have really rushed into the US to take advantage of that premium that you've rightly pointed out has now collapsed.
So can you remind us, so some products, so-called semi-finished and derivative products, will be tariffed at 50%. So what kind of things are we talking about here? What kind of products?
So that's really anything that you're producing with refined copper. So it would be wire, it would be pipes, tubes. It's that next step in the supply chain. And so essentially the market was pricing in a tariff on the previous step in the supply chain, the refined sheets of metal, which the US relies upon imports for.
The impact on US industry then will be partly muted because it looks as though there won't be this sustained surge in the price of US copper.
Well, indeed, we've seen the price really come back in line with the LME price, which now begs the question, what will happen with the significant stockpiles of copper that are on US shores?
Right.
So if you think, as I described earlier, we've already seen what we would expect in a full year landed in the US within the first half year. So that's because the market was anticipating that there would be this tariff that would preclude imports in the second half, or at least slow them significantly. You've now got something in the region of 600,000 tons of copper on US shores, and there's not necessarily the demand for that volume. You've also seen destocking in Europe and Asia, and so we might see an arbitrage opportunity emerge in the other direction. But yeah, certainly in the short term, the US is tremendously oversupplied, and that has implications for warehousing ability, in the major ports in New Orleans, in Panama City, a bit in Baltimore too.